9 a.m. in Shanghai, Shenzhen, and here in Hong Kong. You're watching The China Show. I'm Yvonne Man with David Ingles.
Good morning. We're counting down to the open of markets in Greater China. Our top stories today: stocks across the Asia-Pacific declining for a second day as a record-breaking rally loses steam. Treasuries holding to gains on mixed economic data out of the U.S.
The U.S. announcing plans to control future sales of Venezuelan oil as it tightens an energy quarantine, seizing more sanctioned oil tankers.
Tensions between China and Japan escalate after Beijing launches an anti-dumping investigation into a key chip-making material.
Also ahead, an exclusive with the co-founder of Chinese AI startup Z.Ai as it debuts in Hong Kong.
Plus, a lot more big guests coming through from CES in Las Vegas. Plus, a conversation with the former Fed Vice Chair Lael Brainard on her outlook for the U.S. economy and interest rates. A quick look at the market action as we, post hump day and really after the torrid start to the year. And on a benchmark basis in the Asia Pacific, if you're keeping count, that's a second day in the red. Although globally, we could still call this the stalling of the momentum. I wouldn't call it a substantial drop, marginal at best when you look at the price declines. Volume certainly going down quite a bit, though. So it does seem like we're consolidating after what's really been a really, really good start to the year. Kospi index 1.1%. This one has actually been dancing to its own tune, this specific market, of late. The big story within the Korean markets, well, a couple of things. Like you have defense stocks, number one, on geopolitics. Number two is you have the Samsung prelim earnings. And we'll have more details from Samsung. Jan 29 is the date that they put out there. We've managed to shake off the early weakness in shares, up 0.8 to 1%. We talked about defense, right? Number two and number three on your boards, and BlueScope Steel, of course, rejecting the takeover bid. Shares are to the downside, although we're coming off lows of today as far as that is concerned. Right, rates, we're looking at FX and also commodity markets. As we were pointing out, of course, we'll have a macro conversation in a moment with a former Fed vice chair joining us in a couple of minutes here. Copper's pulling back. Brent is bouncing after the 1-2% drop that we saw going into today. Hence, we're looking at crude in Shanghai and whether or not we're seeing the extension of the weakness that came through in global oil markets overnight. Shanghai crude coming up on your screens, and A50 futures as well. And the focus really has been in onshore markets. Specifically, when you look at onshore markets, hardware, IT, have seen substantial gains of late. We talked about crude. There we go. And we're still looking at the 1.9% handle on the 10-year yield. And as you can see, we're extremely close to that specific level there.
Yep. In terms of your agenda here today, so some big trading debuts are happening here in Hong Kong. We're going to talk about Z.Ai or Zhipu. Also, when it comes to this other one, Iluvatar Core X, you also have Edge Medical Robotics. So those three are going to be banging the gong here later on at the bottom of this hour. There is that pullback in tech, which we've been tracking really the last day or so. That Chinex rally that still seems to have some legs here. But in terms of sectors, as Dave mentioned, it's really the standouts, which is IT hardware, the metal space, pharma as well. You talk about the metals rally we're seeing in China as well. Given this whole supply squeeze that we're seeing, that certainly has been a lot of speculative sort of trading that we've seen of late, and China-Japan tensions that continue to escalate, Dave.
Yeah, in fact, just on that very front, so you have two sort of specific areas of geopolitics we're tracking very closely as tensions remain front and center for markets. You have in the Atlantic, you have the U.S., of course, saying it will control Venezuelan oil exports immediately. At the same time, China is putting Japanese chip-making materials in the crosshairs of its diplomatic dispute, of course, over comments on Taiwan.
Yeah, let's bring in our team. Senior editor John Harney joins us from D.C. Also, our chief North Asia correspondent Stephen Engel is here with us in Hong Kong. John, I'll start with you. They're saying the U.S. is going to be controlling these oil assets indefinitely. What more do we know at this point on how this is going to work?
Well, some sort of plan seems to be taking shape in the days after the raid that led to the capture of Venezuelan President Nicolas Maduro in Caracas. Energy Secretary Chris Wright did indeed say that Venezuelan oil would now, the sales would not be controlled by the United States. indefinitely. And this would involve, at least for now, stored oil. In other words, oil that's already been pumped out of the ground and is on tankers or elsewhere in storage. The proceeds from this, from these sales, would go into funds that would be controlled by the United States Treasury. Now, Secretary Wright was quick to point out that the U.S. would not be taking this money, that it would be in some way, it would some way benefit the Venezuelan people. What it would not do, at least as of according to the plan as it's being formed, would reimburse oil companies for infrastructure, etc., that was nationalized under Hugo Chavez, the former president of Venezuela.
Steve, on the China-Japan front, what's the latest there?
Well, obviously, the Chinese have been employing some of the tactics they used in the trade war with the United States. Export controls, obviously, they did that with the United States in retaliation for a number of their export controls. So they're employing a similar tactic with Japan, which relies heavily on supplies of rare earths. 70% of Japan's rare earth imports are from China. So earlier this week, we've been digesting the news about the export controls on so-called dual-use products that could be used for commercial and military purposes. 40% of Japan's imports from China could be classified as dual use. Japan has vehemently protested that move, but has not, again, backed down on the root of these issues, and that is the comments, of course, from Takaichi-san, the Prime Minister, about any invasion of Taiwan would be a survival-threatening situation for Japan. Of course, China wants a retraction or possibly apology. Japan has been holding still. The latest is China is doing an anti-dumping investigation, which the Ministry of Commerce said could last a year, could last a year and a half, into dichlorosilane, which is a chemical that Japan is the world leader in ultra-high purity dichlorosilane. Okay. So companies like Shin-Etsu Chemical, Mitsubishi Chemical, Sumitomo Chemical, they were all down today. Yes, they are. They've been up quite significantly over the last week or so. They're feeling the pain right now. And again, this is just another example of how China is going to be using their leverage in key materials on the export controls, and then also hit Japan where it hurts in another pillar of their industry.
Team, thank you. That was Stephen Engel here, of course, on set with us, and John Harney as well on the latest on Venezuela. Right, just ahead here in shows, we'll be speaking with Insta360, the co-founder there, about the camera maker's strategy as pertains to expansion in business. We're talking all things Fed, macro rates, FX, and everything in between with Lael Brainard joining us in a couple of minutes as well. And also Hyundai Motor about their plans for robotics and closer ties with a company, you might know it, NVIDIA. Counting down to the open of trade, Shanghai, Shenzhen, and here in Hong Kong. This is The China Show.
All right, we're talking about cameras now. We're talking Insta360 is a Chinese company known for its action cameras, and it's just unveiled some new products at CES in Las Vegas. Let's get to our tech correspondent, Annabelle Jewelers. She's there with the company's co-founder. Hey, Belle.
Hey, Yvonne. Yeah, joining us now is Max Richter. He's co-founder of Insta360, and thanks very much for taking the time to speak with us. We were just chatting earlier. I really think at this event, the whole of CES, Insta360 is actually really standing out because everyone is carrying around these yellow tote bags that have your name on them. So I'm sure there's been quite a lot of brand awareness. But what have been the sort of key takeaways for you from the event, and what's been the big focus?
Yeah, we're really excited to be here. Actually, for the 10th time now. We just had our 10-year anniversary last year. And Insta360 has grown a lot throughout the years. But what I really like about the CES this year, there's a lot about talks about AI. There's a lot of talks about content generation as well. And we kind of like merged these two topics. In fact, actually, AI is something that we started very early on. We used it for our camera to enhance the image quality, to add easier post-editing functionality. So we're very excited that these trends also now get picked up more, and specifically for our use case in imaging and camera technology, it's also something that really improves the user experience. So very happy to be here. There's a lot of excitement at CES about us, and you can see everybody's walking around with Insta360 bags. Right?
It really is quite remarkable. I've just been really thinking whoever made that decision, I think actually probably deserves a bonus. But anyway, I do want to talk about the new products that you've launched, because we were just chatting about how you're expanding that product category and moving away from being considered, say, pure play camera companies. So what's new?
Right. So what you can see here is that's our flagship camera, the Insta360 X5. That's what we're known for, 360-degree cameras. It has 2 lenses, and what it does with that, it erases your selfie stick. So if I would hold this camera like this, it basically makes the camera invisible, and I get a third-person view about myself. So that's one of the very groundbreaking technologies from Insta360 that makes us very unique, and this enables great use cases in skiing, in traveling, mountain biking, whenever you're on the road. But what's new at this show, what we specifically launched here, is our first all-new AI-powered webcam. That's the Insta360 Link 2 Pro C and the Link 2 Pro webcam that is now on the market. And what it does, it has a built-in gimbal, so it tracks you. It's very interesting for like remote working or when you do conferencing. That's something where we also used our initial R&D and research that we put into our handheld cameras and put this into a form factor of a webcam. So super excited also to have this here. And then one more product that's super excited to have with. It's actually what I'm wearing here. So that's our Go Ultra camera, a super portable vlogging camera that can be with me anywhere, that turns you into a vlogging machine. Yeah.
I mean, there's a lot of different companies that have introduced products here, and one that's generated some buzz is a relatively unknown company called Lichtig from China, and they've also introduced a camera that kind of looks similar to that. But what is the pressure that you see, competitive pressure that you see, because it's quite hard to stay ahead of competitors?
I think there's definitely more competition is heating up. That's what we can feel as well, and especially more in the lower tiered pricing sector. So we see pricing pressure happening. At the same time, Insta360's strength was always innovation. It was always creativity, and we observed like what is coming up on the market, but same time we tried to focus on our DNA, what made us successful over the last 10 years, and this was innovation. And you can see this like throughout our product portfolio. When we come up with a new product, there's always something different in it. We have like traditional action cameras, but just last year we launched an Explorer bundle, which turns this traditional action camera into a point-and-shoot vlogging camera. And we partner with Leica here to have a optimized image quality, to have an optimized accessory ecosystem, and we try to escape competition through innovation. And that's really what Insta360 makes different compared to all the other competitors out there. Yeah.
That's quite tough, just given innovation cycles are so short in China, and there's also no shortage of competitors as well. So do you also see the need to consider price cuts this year on some of your key products?
We see our pricing strategy overall that we're going to introduce different tiers of cameras and models. So let's say for our flagship camera, the X5, we have obviously the premium price point on the flagship, but then we also have the X4 model or the X3 model who are still on the market that will then be affordable for early to late maturity of customers, and that are then more retail driven. In fact, the big chunk of our sales also comes from those cameras that are older generation models, and that's kind of our approach. So like with the flagship, we always premium priced, and then when it comes to more entry level cameras, these are mostly older generation, which doesn't mean that we neglect these older cameras. In fact, we keep updating them with software and firmware updates, which also shows a little bit how Insta360 is different compared to other camera companies. In fact, more than 60% of our R&D is software engineers, so we pay a lot of attention to the software experience experience. And I think I'm personally very convinced that in the long term, this is what really differentiates the camera or the imaging space. It's happening on the software side. Like the hardware, it's very easy to imitate, but what you can't imitate so fast is the software. And that's where we build our expertise.
I want to talk about the listing last year because you debuted on the Starboard or Star Market in June, so it's about 8 months, I guess, ago. Was that the right bourse for you to have targeted, and what are you thinking about in terms of fundraising or further capex that you need?
Right. It's a good question. Actually, this IPO helped us to get more funding for R&D, for initial research in new product categories. Like you can expect a lot more exciting products and product categories coming up in this year as well. And we use that funding really specifically for R&D. And secondly, we use it for international expansion. Like I can tease this a little bit. We're going to have a flagship store in Los Angeles. We're going to have flagship store in New York, in Munich, and all around the world in Tokyo. And that's where we use this funding to really expand more internationally, to be more closer with the community, to be more closer with the user. And in the future, like we keep observing what's possible and what's happening in the space. And if there's more funding needed, we will evaluate all options. Yeah.
So you're announcing that you're going to have new retail presences in the US, Germany, Japan within 2026.
Correct, yes. 2026 will be the year where we will massively ramp up our retail footprint, and specifically doing this with dedicated flagship stores that are owned and operated by ourselves.
What does the headcount plan look like then as well?
Right.
Yeah.
We now have, in the past year, since in 2025, we have around 4,000 employees worldwide now. A big chunk of this is really on the R&D, on the software and hardware engineer side. That's where the most portion is. Same time, we also try to expand into our Los Angeles office. We have a Munich office and a Tokyo office. So here we also want to really invest more locally, work with local talents, and be, again, closer to the markets, closer to our customers.
So 4,000 today, again, going to the end of the year, what do you actually expect to be at?
I think you can probably guess that we will add another 1,000 headcount or so, but it's really for us case by case, reevaluating how's the growth trajectory happening, but a lot of the investment will really go into the R&D. Yeah.
And just going back to that global expansion plan, in terms of the outlook, it sounds like, are you going to be prioritizing ex-China, or are you still keeping that focus on the Chinese market as well?
I think we are. It's definitely including China. Like it's China plus rest of world. For us, really important that we really see ourselves also as a global company, as a global brand with global talents. I'm originally from Germany. We have teams here in Los Angeles. We have teams in Munich, and we really try to expand worldwide. And again, though, Shenzhen is a great place for us to do our R&D, our research, to have a great access to an amazing ecosystem. That's where our product development is happening. Same time, for example, in Japan, we already have some software or imaging engineers that help us to complement the HQ roles. And that's something super exciting coming up as well, potentially in Germany. Yeah.
Wow, okay. But if you want to be 25% bigger by the end of the year in terms of headcount, you've got quite a busy few months ahead then, it sounds.
It's an ambitious goal.
Okay, Max, thanks so much for joining us
Thank
this morning.
So
that was Max Richter there, co-founder of Insta360. Dave, Yvonne, I'll hand it back to you.
Right, fantastic. Of course, we'll be back live there at our set in Vegas in a couple of minutes with another big interview coming up. In the meantime, though, have a look at markets on the approach to the open. 10 minutes away, we should be getting the pre-markets on the Hang Seng. Onshore A50 proxies are pointing to some downside, finally, after what has been really a manic start to the year, although specifically IT, hardware, semis equipment have been on absolute fire. So we'll look at that specifically. Hang Seng Index, 1% to the downside. Trading debuts, a lot to talk about there today. More on all of that coming up. This is Bloomberg.
Three trading debuts in Hong Kong today to watch out for. We're seeing live pictures out of the Hong Kong Exchange this morning. Very happy folks there. And there you go. Z.Ai, we have Iluvatar, Corex, and Shenzhen Edge Medical Robotics all listing here, all doing quite well so far.
Yeah, there we go. It's been an extremely busy first week of trading, and I mean, certainly we still have more to come tomorrow, and Giga Device, I believe, of course, is the big name to watch next week. All that is to say, of course, a lot of these names are ticking all the right boxes, right? In terms of what's hot,
all the buzzwords, right?
All the buzzwords.
AI, chips, robotics,
surgical robotics, right?
Yes, surgical robotics. Yes, not humanoid, but robotics.
Well, at some point, the concepts will blur.
Yeah.
And that's it for us. But, up until that point, we'll get to that. So as you can see, of course, you can actually tell by the number of trading debuts that are coming here in Hong Kong, by the number of gongs that are there at the Hong Kong exchanges. And as you can see, the pre-markets, not to even mention, right, massively oversubscribed in the retail portion. Good luck getting an allocation. But yes, and a lot of these ones are also priced to the upside. And I think we have a fantastic statistic for you that we haven't even made it to the 10th day of the calendar month, and already we can extrapolate that this is and likely will be the best January for listings in terms of money raised, I believe, here in Hong Kong.
Yeah.
Best January ever.
In case you're confused with the names, we are too, by the way. Like Z.Ai also is known as Knowledge Atlas Technology, also known as Zhipu. Okay, so that's all one company. But they are the first major generative AI startup to list from China there in Hong Kong. So certainly that's one thing to watch there. And the gray market has been quite strong as well. So certainly it is going to be a busy year, not just for IPOs, but also a busy year for the Fed too, Dave.
Yeah, it's going to be extremely busy as we try and figure out. So the dots were interesting, right? The last Fed meeting, when you had a bunch of things, right? You had the decision clearly. You had the tone of the decision, the statement. The dots sort of coalesced into market pricing. So I think market pricing is currently at about 2, closer to 2.5 if you include December of next year. So let's call it closer to 2. Don't be surprised if they go 3. But the dots also tell you, don't be surprised if they can only go 1.
Yeah.
And that is to say, that's with the current personnel. Right, and we have, of course, Jay Powell's term coming up, I think, in May.
Yeah.
And that's also something to consider in what way that will reorient the Fed in terms of their decision-making and apart from, of course, the degree of confidence we have over economic data, too.
Yeah, so certainly that is going to be a question which then extends to, Fed independence and whether the divisions that you're seeing within the FOMC right now, is that in some way going to be a way to make the next Fed chair a bit difficult when it comes to lowering rates much further from here. So that certainly is going to be the key questions for 2026. Here to answer some of them for us, hopefully, from Singapore is Lael, Brainard, former Federal Reserve Vice Chair and former White House National Economic Council Director. She joins us from Singapore this morning. Thank you so much for joining us and for the time. Obviously a lot of questions for this year. I just want to start off with the first question, or maybe brings us back to what happened last month. Do you think the Fed was right in terms of cutting rates further in December?
Well, I certainly think that the Federal Reserve made the right call starting in August to focus on the labor market. We saw 5 months in a row the unemployment rate ticking up. The job market had slowed, and also the tariff impact was somewhat more moderate than many had feared. And those things together made sense to do some insurance cuts. They did 3 cuts in a row. But as you know from the minutes and from a lot of the remarks that some of the Reserve Bank presidents in particular have given since then, it was a finely balanced decision. And so I think a large number of the committee are going to want, unless the data really deteriorates dramatically, are going to want to be on hold for at least a meeting, maybe 2 meetings, while they observe how the economy is progressing.
And between inflation in the labor market, and since we're looking at data now, which of the two do you think currently holds more weight as far as decision making is concerned?
I think the labor market is the focal point for the majority on the FOMC. Again, the unemployment rate has ticked up. It's now at 4.6%. We'll know more tomorrow when we get that December payrolls number with the unemployment rate, and that is going to be very carefully scrutinized. The last set of data was not very good because of the shutdown. Also, we've had a lot of government workers coming off of government payrolls during this time. So tomorrow's print on unemployment is going to be very carefully scrutinized. I think if you saw a jump up in the unemployment rate, it would put a cut back in play. But So far, we've seen data from ADP and also from job openings, layoffs, that suggest that the labor market continues softening but is holding.
On inflation, though, I mean, we still, 2025 was a year that we were waiting for this sort of tariff-induced pass-through. We didn't quite get it. I'm just wondering, in terms of taming inflation, the Fed has basically been trying to do so, but it's been 5 years since they haven't been able to tame it back to 2%. Is there a concern now, do you think, of them really losing their credibility when it comes to their inflation credentials?
Absolutely. It's a risk management exercise at this juncture, and that really was prompted because of the imposition of very high tariffs. I think before that we had been seeing that core inflation, underlying trend inflation, moving back down to 2.5% on its way to 2%, but then you added tariffs into the mix, and of course they had the effect of slowing hiring or stalling hiring, and also raising prices. So the hawks on the committee, the ones who are not inclined to cut, had some real reservations, dissented on the most recent cuts, have articulated precisely that concern, that after 4 years of inflation being well above 2% and inflation actually having moved up a bit in the last year, that you are risking the inflation anchor by cutting. But because the labor market was deteriorating more rapidly, and because I think other members of the committee got more confidence that the tariffs weren't going to have as big an effect and that it would be, I hate to use the word, transitory, they got more comfortable softening interest rates to support the labor market.
And this is it's a fluid concept. Even market expectations around how many times the Fed can actually move on interest rates. The current pricing is between 2.5 for this year, 2.5 cuts of 25 each. What do you think the risk is to that number? Is it to the upside or to the downside?
Well, it just depends on how strong a first half we get. There are reasons to think that growth could actually accelerate in the first half because of the tax cuts and because we still have that really strong impetus from AI-related investment that has been driving growth. And of course, in the third quarter, I don't expect this to be true in the fourth quarter, consumers were quite resilient. But we're going to get a bounce back in the first quarter, taking into account the shutdown, then the tax cuts kicking in. So it's quite reasonable to think that you may see no cuts until the second half of the year. And at that juncture, we'll have a new Fed chair, presumably one who's very much in line with the president's thinking that we need more cuts. But that new chair will have to make the case to the other members that those additional cuts are warranted. And it'll just depend on whether inflation has peaked and is coming down at that juncture.
I want to get your take, too, on really the latest move from the Trump administration to ban institutional investors from buying single-family homes. I think it's, in a way, it seems like the Trump administration is trying to tackle the affordability issue. How do you think that changes the calculus for the Fed?
Well, look, I think this issue of private equity investors coming in just to a few markets in the U.S., but really buying up a large number of single-family homes and converting them into rentals, taking those single-family homes off the market for first-time homeowners. That has been a long-standing, over the last several years, concern of Democrats and Republicans alike. Now, banning that using executive authority is quite a heavy-handed regulatory move. So there's been legislative proposals, but this is quite a heavy-handed move on the part of the administration. Nonetheless, I think it really speaks to the affordability concerns on the part of many Americans that home ownership is simply out of sight. It won't be sufficient. What we really need in the United States is a more supply of affordable homes, of entry-level homes, and that's going to require a real push from home builders, more favorable interest rate environment, but also more tax incentives from the government.
I wonder, there's the affordability issue, which is clear that is present and felt by a large part of the economy. what I'm trying to wrap my head around is whether or not that's actionable short term as far as the Fed is concerned, in terms of them determining where the neutral rate is, where policy should be.
Well, look, I think the Fed has a very important role to play. They are really the critical independent institution when it comes to fighting inflation, keeping inflation expectations anchored at 2%. And for that, their credibility is absolutely essential. So for an administration that should be focused on affordability, because this is the most important thing for most Americans, they should not be attacking the credibility of the Federal Reserve. They should be supporting the Federal Reserve's important role. But much more is needed. Obviously, putting tariffs on things like bananas and coffee and chocolate, when we don't produce much of that in the United States, was a direct hit to consumers' pocketbooks. They need to be very focused on electricity. The AI boom is going to cause competition for electricity in a lot of these markets, and it's critical for Americans that the government actually help ensure that electricity remains affordable, along with housing, which we just talked about.
Ms. Brainard, you might not know this. You probably don't know this, but you just talked about my breakfast there with bananas and coffee. My team knows about that. Can I just ask you a direct question, though? As it pertains to political pressure on the Fed, in your view, do you think the Fed has lost perhaps two things separately, a degree of autonomy and perhaps because of that, a degree of objectivity as it pertains to decision making?
Well, I think that is certainly what is at risk here. And I just can't begin to emphasize how important that is. The Federal Reserve's independence is really at the crux of its ability to keep inflation down. It's also at the crux of why global investors are so confident normally holding dollars, because the Fed has a track record of institutional independence, certainly since the 80s, of keeping U.S. inflation low and stable, and that in turn means that Treasury securities hold their value, dollars hold their value. So a lot is on the line here, and yes, the president has taken unprecedented measures to put pressure on the Fed, including, for the first time ever, firing or attempting to fire a governor without going through an investigative process. And that's why this Supreme Court case, we'll see hearings on that January 21st, is so crucial. If the Supreme Court doesn't uphold that the Federal Reserve is different from other independent agencies and that you cannot fire governors at will, that would be a major blow to inflation fighting credibility in the United States.
Lael Brainard, thank you so much. The former Fed Vice Chair there, joining us from the sidelines of the Bank of Singapore's annual 2026 Outlook Conference. In terms of 6 minutes into the opening session here in Greater China, you take a look at what it's seeing, and it is a bit of a back step here once again in this, what has been a very robust rally to start 2026 here. So Chinex is also falling probably more prominently than the rest of the onshore benchmarks there. The CSI 300 is down about 0.5%. You're seeing some of these very hot commodities like copper also coming off a little bit as well. Crude's coming off by close to 2%. And we're watching some of these big names as well in the tech sector in Hong Kong, just given what we've been seeing here. What was you mentioned, right? IT hardware and commodities have been sort of the very, very hot sort of sectors here. And then, of course, we still have those three trading debuts here today, Z.Ai and the like. HS Tech is down 1%. You're seeing some losses here when it comes to Baidu, Alibaba, Tencent, Meituan, Xiaomi, all falling about 1 to 2% here this morning. And we are seeing still a slightly closer to 7 handle for dollar China here. So we have seen some lessening in terms of the appreciation of late. Let's take a look when it comes to some stock movers here. Oil stocks really in favor. We're watching very closely here, just given what we've been seeing with Venezuela and how the U.S. plans to at least control these Venezuelan oil assets indefinitely. We're seeing the Costco shipping, for example, is up some 5%. But you take a look when it comes to some of these metal stocks, right? So we talk about the amount of in terms of copper, nickel, lithium. We saw open interest surge to a record amount of some of the at least 6 base metals in Shanghai of late here. So they're really betting on the supply tightness that we're seeing as well. So there you go. You are seeing a mixed picture, though, with Angan Steel and Zijing Mining here today. But there you go. We have some pretty good debuts here today in Hong Kong. Z.Ai, Iluvatar, and Shenzhen, the last two seeing double-digit gains.
Fantastic. Okay, you know what stock has seen a fantastic start to the year that Hyundai Motor, up until this morning, it was up 15% midweek. So we're down a little bit today, 3.5%. There we go. Thank you so much. The first autonomous mobility robot platform has won a top innovation award at CES 2026 in Vegas. In fact, Sherry, our colleague and co-anchor, is there at CES for us with the company's vice president. Sherry.
Yeah, with such bullish bets on the robotics sector, is a really big achievement here at CES 2026 to have won that award. And joining us now is Tong Jin-hyung, Vice President and Head of Robotics Lab at Hyundai Motor Group. Really great to have you with us, and congratulations on the Best of Innovation Award this year.
You won.
Tell us a little bit about the moped, which is right now just below us, and we can show you that footage live here at CES. What exactly is this machine supposed to do?
To introduce moped, I really like to talk about some story. At the first time, I studied leg robot previously, but a lot of people ask me to how to make a long operation time, energy consumption less, something like that. And then another thing is there is actually leg robot has really strong advantage because they can stabilize its body by utilizing leg. And so how to combine the characteristics of leg robot and wheeled robot, because it less energy consumption, right? And that leaded to the moped. So we developed the moped.
And so I can see that the top is pretty flat. Our viewers can watch it right there. So this is also used for that last mile delivery.
Right.
Actually using it in real life practices. When are the deliveries expected? How many are you expecting for this year?
I actually, who knows the future? But I think, in my opinion, so they're gonna be occur soon because right now a lot of people is doing some research for the autonomous driving with some unique mechanism delivery robot, right? So for example, moped has some a strong advantage about some stabilizing its base body, and so it can adapt to the rough terrain in outdoors, right? With some autonomous driving algorithm, it can deliver by itself to some door-to-door delivery services. So moped has really smart navigation algorithm powered by AI.
How many are you producing this year?
So 4 years. Actually, in CES 2022, we unveiled the concept of moped. Right after that, a lot of people ask us to prepare for the mass production about the moped. So right now we brought the moped that is the mass production ready product right now. So we have a plan to sell in the first quarter of this year.
You already have these orders in?
Yeah, actually we did, but it's kind of confidential. But a lot of people ask me to prepare for their order, and actually on the top of the moped there is some mounting rail. That means some payload can be attached to the top of the moped. So a lot of people just add their own payload to the moped for their own propels.
So it's like very adaptable, is your point, right?
Right.
That's the point, right? We're seeing a lot of gadgets and a lot of innovation here at CES. The question is, will this really make it in practical, real-life situations? When you compare what Hyundai is doing, what South Korean robotics is doing, how does it stack up in the global race in this sector, especially against perhaps the Chinese?
Yeah, actually, Chinese company has a really large size of market, so that is definitely really strong point. Also, recently, there are a lot of great research about the AI, so that kind of thing makes some average level of AI. So a lot of engineers can apply some AI application with some tool for the AI. So that kind of thing makes some standard really high. So Chinese company looks like really promising right now, but I can dare say a lot of people know how to do that. But we have to find some application or successful story with robotic solutions. So I think it's an open question yet. So the engineer and entrepreneur have to try our best right now to open the market right now.
Are we going towards a trend of humanoids, which is another big buzz right now? And even Hyundai's Boston Dynamics unit just released the Atlas humanoid robot. Are you collaborating with Boston Dynamics at all? Or does Robotics Lab have plans for a humanoid?
Yeah, so actually as an engineer, I think technology have to flow to each other. So we share the under the level of some research side. So we just share the technology, and sometimes we learn from the Boston Dynamics. Also, we let the Boston Dynamics know our strengths. So, but our target market is different, and regarding to humanoid, I think basically the first problem is mobility. Second problem is manipulation. The mobility plus manipulation can be humanoid, right? But right now, I think in the research level, we have to go a long way, because a lot of people expect the humanoid can do everything, but as an engineer, that kind of thing will happen someday, because a lot of engineers try their best, right, including me. But technology, improve continuously, and then we just follow up state of the art right now. But someday, humanoid can do work there, just a task, I think.
Is it more feasible than what, say, Chairman Chung Il-sung was talking about when he visited Samsung, and then he was talking about the cleaning robots and how he thinks that he can combine it with Mobet, for example, to even make them better? How would that look like?
I think it is a really interesting project, because basically robotics is kind of interdisciplinary project. So I think we have to try combine every technology for each application. So cleaning is a really interesting project, I think, because in case of the Korea, we have a really serious social problem such as labor shortage, right? So we can just replace the shortage of the labor with robotics technology. For example, cleaning is really interesting, right? Nobody want to just clean the room continuously, right?
Yes, especially if you're elderly and you actually need help. So that is very important in terms of robotics and where Hyundai Robotics Lab wants to go. Tong Jin-young, Vice President and Head of Robotics Lab at Hyundai Motor Group, great to have you with us with your award, and congratulations on that. Back to you guys in the studio.
Thank you.
Fantastic. Yeah, there we go. They won. If you are a subscriber and you want to rewatch that interview, including, of course, that not so veiled hint that they did win, start of the interview, if you just want to scroll back to that. TV Go is the function you run. You can also be part of the conversation. Send us instant messages, suggestions, and questions for our guests. Coming up, lots more, of course, on deck here today on our program. Check it out, TV Go. And, oh, there's Sherry. Okay, and that's the crew. This is Bloomberg. Welcome back. You're watching The China Show. The co-founder and chairman of one of the companies that is debuting here in Hong Kong today, that's Z.Ai, says U.S. developers may succumb to the same price-based competition that's actually forced Chinese AI companies to actually forego their profits. Speaking exclusively to Bloomberg, Liu Debing also explained the reasoning behind taking the company public.
We've
had some plans for going public since quite early on. Our R&D investments in foundation models and the following commercialization strategy were essentially preparations for an IPO. We started some initial work since last year. Now we achieved the IPO this year. That's more about following the natural progression of steps.
How do you plan to spend the money that you've raised through the IPO process? Where do you see it going mostly?
The fundraising amount for the IPO is planned based on the company's development strategy. There's two major segments: R&D for foundation models, and the following commercialization strategy. 70% of the IPO funds will be allocated to R&D for foundation models, which includes the development of a universal foundation model, the currently highly anticipated intelligence agents, and multimodal systems. About 10% of the funds will be allocated to commercial infrastructure, supporting the foundation model. This includes developing inference intelligence tools, and models as a service. Additionally, a portion of the funds will be allocated to ecosystem partnerships, and some funds will cover operational expenses or general corporate purposes.
It's been said, for instance, that something that Anthropic might charge $200 for, Z.Ai, for instance, would be looking at 200 yuan. So it's obviously priced a lot less than what you see in the US. But how does that impact your margins, and also how does that impact your path to profitability as a business?
We believe that based on the overall trend, the price for mass will continue to fall gradually, because we think it should be an infrastructure for the entire society. At the same time, for AI, for example, the compute costs should also be gradually decreasing. We see this trend very clearly. For instance, in our current coding plan, the price of compute power for our coding API is about 1/10 of cloud's, while our performance can reach 90%. This makes us more competitive and benefits more users.
And that was the Z.Ai chairman Liu Debing speaking to Bell there, of course, upon their trading debut here. Some other corporate stories that we're watching for you today. Hong Kong's Financial Secretary Paul Chan has told local media that IPO fundraising for this year is likely to exceed 2025. And that's as geopolitical tensions drive Chinese firms to list in the city over U.S. markets. Speaking with the Hong Kong Economic Times, Chan also said the risk of widespread defaults among small and medium-sized developers remains very slim. AI startup Anthropic is said to be raising a new round of funding that would value the company at $350 billion. Sources say the cloud chatbot developer seeks to raise $10 billion in the round. And we're told that Singapore's Sovereign Wealth Fund and Coatue Management plan to lead the financing, with Microsoft and NVIDIA also expected to participate. All right, look at Asian markets as we go into that lunch break here right now. We are seeing a bit of a retreat here across, of course, Greater China there, with onshore and offshore off. Hang Seng is down about 1%. This is Bloomberg.
All right, we're just looking at some of the semis equipment names, some of which are still moving to the upsides, although the benchmark, there we go on the screen, the sub-index, is still trading to the upside. You do have some names, of course, doing the lifting today. The four in your screens have done the lifting of late, done substantial gains, and not exactly we're seeing a sell-off. It looks like, in fact, we're reversing some of the earlier weakness there. Pharma stocks have been in focus, on the up in recent days, I think still are up. There we go. It's really been it was a fantastic 2025, of course, and it does seem, of course, that is set to continue given some of the rhetoric and announcements, or pronouncements, rather, that have come out so far out of industry chatter early in the year. Defense stocks in focus, not just in China, right, but in China, of course, for similar reasons. When you look at what's happening, though, and I should call attention to likes of Korea, where you have Hanwha Aerospace and these other ones as well, Oz and Japan, on the back of moves overnight in the U.S. around their defense sector. Okay, we've been looking at the onshore markets very closely, and this is one really quite telling metric that things have come alive substantially in the early goings of this year. 2.8 trillion was the turnover on Wednesday, short of that the day before. So we're tracking that very closely going into the session today. We're now currently at 740 billion so far, so which is quite substantial already for this time of the session.
Yeah, we have coming up much more when it comes to not just markets, but also talking AI commodities with Taosha Wang from Fidelity and Paul Mackel on FX from HSBC. Welcome back to the China Show. Here's a look at the HSI half hour into the session. And yeah, on these kind of cold, frigid days, you take a look at when it comes to the heat in this market has been taken off a little bit as well for another day. We're down about 1% on the Hang Seng here. 8 shares also down about 0.9%. You start to see maybe some geopolitics are emerging. Maybe there's just this robust rally we've seen just 8 days into the new year may have gone a bit too far, too fast. So we are seeing a little bit of another pause in this equity rally here once again.
Yeah, like you you and me, investors, might be getting some cold feet, literally. I cannot feel my toes.
It feels like another, 5 degrees today, I think?
Yeah.
Yeah. I'm bringing the Ugg boots out.
But here's the thing.
On set, too. I demand it.
Are you
kidding?
not?
No.
Okay. I was about looking underneath the hood. But for people who are looking at the temperature and doing a Google, there, Yvonne and David are complaining again, and see, it's not that cold. It is actually. You need to understand. You need to come to Hong Kong to actually feel. It feels. There's almost a multiplier effect.
There's no insulation in the buildings, though. That's the thing.
We don't have heating here. That's right.
Yeah. Anyways. We need to stop complaining. We're being sore complainers now, I feel.
Where we have heating, though, is in the IPO market, which has been still hot. Some of the price action we've come off, to the point we were just making, coming off highs at these levels already. The 3 trading debuts today. Speaking of some of the buzzwords, so we're looking at Samsung, of course, came out with prelim earnings, I believe at 20 billion on, we'll get more on the 20 billion profit, record profits. But I think they're also breaking down the numbers in a couple of weeks. 29th, I think, is when they're coming out with a breakdown of the number.
Yeah, I mean, you're still seeing growth of north of 200%, and thanks to these memory chip prices that continue to be rising. So that certainly is helping the likes of Samsung. SK Hynix, though, is up some 5%. Once again, SMIC is worth to watch as well. We're up close to 4% in Hong Kong. Morgan Stanley is saying it's their top pick when it comes to the key enabler of China's AI localization. So they see continued strong demand despite memory capacity expansion among other players as well. Of course, when you talk about NVIDIA, H200 and the like.
Yeah, that remains their topic in the market, right? Let's pivot back and have a look at Samsung, right? Because that has really carried the mantle in recent days. That, and of course Hyundai, and of course last year was SK Hynix. That is just all to say we have really seen a lot of pillars of support for the Kospi index, which I can just tell you out of just curiosity, the index has actually now doubled from the low that we hit just in April of last year. Now, these numbers, of course, fourth quarter prelim numbers soaring, I think more than tripled. You have surging global AI demand, this comeback of memory. Let's bring in Yu Kyung Lee, our Asia stocks reporter, to help us understand the numbers. So what did the company report specifically, and what's the bigger context here?
Yeah, so the bigger context here is that the memory chip demand is so strong, and maybe it might even be stronger than people have expected. So if you look at the Samsung's earnings estimate in the last few weeks, it was the company that saw the sharpest earnings estimate revision upward among its peers. And if you look at the Samsung share price this morning, it was a little bit down at the open, but you saw the buyers piling in too quickly. That's sending the Samsung shares up more than 2% at the moment. And I think one thing that investors might be asking themselves is, do you have enough of Samsung shares? It's not a matter of whether you want to sell this on the possible AI bubble or whether you want to buy something else. But I think one analyst was telling me that he was asking his clients whether you have enough of the memory chip stocks such as Samsung and SK Hynix. So the 20 trillion won operating profit for the quarter was huge, and Citi just estimate 17 trillion won likely came from memory chips. So this memory chip demand seems to be a lot stronger than people have projected.
Yeah, it seems like, you can't get enough of it, it seems like, from what you've been talking to people about. So great stuff. Thank you for summing that up for us. And certainly that is why we are seeing maybe some gains now after being fluctuating between gains and losses for Samsung here. But yeah, what a comeback story really for the stock itself, more than doubled as well, similar to what we've been seeing in the Kospi. Our Asia stocks reporter, Yu Kyung Lee, they're joining us out of Seoul.
Yep. Let's talk more about the AI theme and what that means this year. Has anything really changed? Here on set with us is Taosha Wang, portfolio manager at Fidelity. Happy New Year.
Happy New Year. Good morning.
Has anything changed with AI from your thesis that you've laid out quite nicely last year?
Not in, I think, the big picture directional lens. I think the AI theme is still best played, in my opinion, through AI, tech, mainly the semiconductor side of it, as well as the commodity side of it. So in the new year, I continue to see AI and commodities, these two themes that are very powerful. They have lasting power, and they are very interconnected. as two investment themes.
It seems like what's dominated a bit more this year, I mean, it's only been 8 days, but it has been the IT hardware side versus the software. Is the playbook still more towards the IT hardware?
I think so. I think fundamentally there's greater moat, and there's also, and there's still the existential debate within the software space, as you know, whether the existing model they charge usually by seat, and we see the number of seat, as in the number of tech workers in predominantly the U.S. are not increasing because there is a hiring sort of effective freeze in a lot of companies because of the AI changes that are prompting companies to rethink how they hire. So the fact that companies investing a lot more, mainly into machines and physical sort of setup to support AI and hiring fewer people has really wide sort of implications for the entire sectors.
What do you think about valuations in the U.S. specifically?
In the U.S., I think so far they're still very much being supported by earnings, but sometimes it's a confidence game. Can the circular investment that people have?
They don't seem over exuberant at this point. Is my question.
I don't think they're necessarily over exuberant per se. I think famous last words. But I do think the underlying technology is still strong. The underlying commercialization effort is still strong. You asked the question specifically for U.S., and I think that's sort of very interesting because there's something going on with China as well. And the Meta-Manus deal that has happened, sort of in the last 2 days of the previous year, I think it's something that is quite significant, and its significance is beyond its sort of reported $2 billion price tag, which is a relatively small price tag in, sort of the grand AI scheme these days.
You mentioned it's like a new operating model.
Yes,
How so?
I think it is a new. It points to a new operating model in this current global AI race. Number one, the global top VCs are back with the Chinese founders. In the last few years, it's really been sort of a VC winter for Chinese founders, Chinese companies, and they're coming back. The global investors are coming back, and it's being led by one of the most prestigious U.S. VC companies. Secondly, those Chinese companies, being a very young Chinese companies, being acquired not for access to the Chinese market, but for a globally competitive technology, and they're competing head-on with the OpenAIs of the world.
Too.
Yes. Yes, and now it's getting plugged into one of the biggest, technology platform in the world. So that is the technological competitiveness of it. And then the third part of it, I think this story really highlights to us that the AI talent, the flow of AI talent is really very fluid and very dynamic. And people often like to think about it as, the US-China AI race or, the Google versus Amazon kind of, AI race. But it's really, I think the global AI race is very multifaceted. So the flow of talent, just like the flow of money and knowledge and information, should be viewed as fluid and dynamic. And that really has, I think it really points to more crisscross, across the border, across technology, across people from different backgrounds to compete in the AI race.
So I think if some of our viewers have been following the show and some of our interviews, right? So last year you talked about nuclear, and the reason I bring that up is, people have been trying to figure out if you can't buy the hyperscalers, you broaden out to the periphery, right? How do we power this thing? That's energy. How do we cool the data centers? You have the cooling stocks, right? The reason I bring up the latter too is I think it was yesterday out of CES, some of the cooling related stocks dropped because of an announcement from NVIDIA and Shenzhen Wang. And it seems the technology is moving quickly, that some of the assumptions get dated. And I wonder whether or not investors are spreading the net too wide, not really understanding how that might look in 12 months' time. In other words, is the pool of AI winners more narrow than we actually think? Are we
branching out too far?
Are we branching out too far?
I see your point. I think the short answer is no. I think AI has the technological core to it, but it has immense demand for physical resources for it to operate in the physical world. And that is that means that we cannot. That means the opportunity sets are not just limited to the traditionally tech space, and it has to have significant ramification in companies and sectors that has to do with the physical resource space. Now, because of this is a rapidly changing technology, the certain specification of that technology can change, which results in variation of that demand to physical resource. And as a result, to something relatively niche, like cooling, heating, or whatever, that temperature management demand can change because of certain technological change. But then the fact is, if you take a big step back, the AI demand grows exponentially because it's driven by technology. It tends to move in exponential ways. So the demand on physical resources also move exponentially. But physical resources to build up that physical capabilities, that supply tends to grow linearly. Now you have exponential demand meeting linear growing supply. And that, I think, is the fundamental thesis for being bullish on physical resources, including commodities, including nuclear energy, including copper, which is so incredibly important as a as the new
infrastructure.
metal.
You seem very bullish, Taosha. I mean, is there anything that you see? I mean, whether it's people saying this is a bubble, the amount of debt that would need to be required to, the money that used to be raised to fund all this, is there anything in the radar that concerns you that if and when this bubble pops, that you would tap out? I mean, at what point are we going to see that, you think? And what would it be that would concern you?
Red flags.
Financial, I think cash flow is always an important thing. Okay. I mean, because the fundamentals are still growing. What would make the music stop would be sort of, liquidity being drained out of the system. And it could be, I mean, so far we see, most of these companies are still very much being able to fund their, growth with operating cash flow. But it could be, at some point there's too much debt, too much sort of shadow banking debt, private debt that has been, people have had some concerns. So liquidity is a key sort of key catalyst, and user adoption. I think if the moment you start to see user adoption, start to inflect.
What about capex? And a small change in capex spend, because that's the first thing people point to as that might actually push some over the edge. Would that scare you?
You mean the capex increase or decrease?
A small capex decrease among, say, the Mag 7.
Yes, I think that would essentially you have to understand why are they not spending because they see the demand dropping? Are they not spending because they're capital liquidity constrained? Are they not spending because the technology has gotten efficient? Now they can do more with less money. So I think the reason also matters. But I think, frankly, the market is also nervous about capex overspending. That's why I ask you, am I worried about either way? So I think this is AI and related physical resource commodity demand are a big long-term trend. So I think it's equally dangerous to leave the game too early as it is to leave the game too late.
Is there still that preference for North Asia for you then when you're talking about some of these AI themes?
In my case, not necessarily, but my peers might have different.
Okay, so you're looking everywhere.
I am looking globally, yes.
All right,
for the best opportunities.
Yeah, Taosha, thank you, Taosha Wang, their portfolio manager at Fidelity. Still ahead on the China show, HSBC gives its outlook on the FX markets. Of course, as Traders Way makes eco data, the impact on the Fed's rate path. We're going to have Paul Mackel joining us pretty soon. This is Bloomberg.
Right, welcome back. The winners are clear and the losers are as well. Perhaps more on the winner's side here of what's the developments, which we'll get to in a moment here between China and Japan. First two on your screens are Chinese makers. The bottom two, of course, are the opposite side of that trade. And certainly the story here is Beijing launching this anti-dumping investigation into a key chip-making material from Japan. It's a further escalation of their diplomatic dispute, and it does come a day after Tokyo then told Beijing that for imposing new export controls. They opposed that out of the Tokyo side. Joining us here on set to help us make sense of where we are exactly in this very fluid story, Stephen Engel, our Chief North Asia correspondent.
Yeah, so we have to put into our lexicon now dichlorosilane.
Oh.
Dichlorosilane.
Okay.
DCS, let's just call it DCS.
DCS is easier.
So essentially that's a chemical that Japan sort of dominates to a certain degree. Shin-Etsu Chemical was the company you see that was up on your screen. They are the largest maker of the ultra-high purity DCS. And they do ship to China. So again, this is another sort of a salvo from Beijing in their ongoing battle, if you will, against the comments that were made by Takaichi-san, the Prime Minister of Japan, of course, at the end of last year, essentially saying that any invasion of Taiwan would be a survival-threatening situation for Japan, and we all know about the various moves that have been made. And also, let's face it, Tokyo's reluctance, if you will, to apologize or to retract those comments from Takaichi-san. So this is in addition this week to those export controls on dual-use items that China essentially sells to Japan that could be used for military purposes. I think 42% of Japan's imports from China could be classified broadly as dual use, so for military or for civilian or commercial use. Also, Japan basically relies on China for 70% of its rare earth imports. So what Beijing really is doing is looking at where the levers of, leverage they can employ against Japan, much like they did with the United States in the trade war, which led to export controls and really, really difficult licensing processes for certain rare earths needed in the tech supply chain, as well as rare earth magnets and the like. So I think they're just copying the playbook because they have that leverage.
They have that tool.
Yeah.
Which a lot of people, I think, last year said they could use it again, right? And it brings it back to what we saw a few months ago when President Trump said, he settled this whole rare earth issue for the world after that truce with China. Where do you think the U.S. stands now? It seems like China is really testing the U.S.'s support for one of its closest allies, Japan, now.
Absolutely. And sort of the quiet nature of the Donald Trump administration on this front sort of is indicative of what probably is happening behind the scenes. And I'm speculating here, and that is don't rock the boat too much, Japan, because, again, they had that hard-fought, I wouldn't call it a victory, but the truce, where they got the logjam, if you will, of export controls and licensing process sort of cleared, and the U.S. supply chain of these rare earths, which are critical to the U.S. supply chain in the tech world, is on better footing than it was 9 months ago, obviously. Now industrial Japan is going to be faced with this as well. So how much support, when push comes to shove, if this goes on for another year or 6 months or whatever, and more pillars of Japanese industry are targeted, where will the United States come in support of Japan, or will they? That's the big question.
Thank you. Stephen Engel there, our Chief North Asia correspondent, and the latest, of course. Those tensions between China and Japan are also top of mind when it comes to what we're hearing from our columnists as well. You should check out David Fickling's column. He's been talking about, Beijing might have overplayed its hand when it comes to rare earths. His sort of argument is this is going just to get the rest of the world to really start ramping up their own, self-sufficiency when it comes to these sort of critical minerals as well. So, did they reach too far? Is certainly one question that we're asking here today. Subscribers can really check it out on the terminal or online at Bloomberg.com.
Yeah. Okay. In other geopolitical news here, the Trump administration says it plans to control future sales of Venezuelan oil and hold the proceeds in U.S. accounts. Now, the statement from the Energy Secretary, Chris Wright, is the clear signal yet on Washington's strategy to control Venezuela's most valuable resource. Now, separately, President Trump says Venezuela will buy only American-made products using the revenue from 50 million barrels of oil that it is then sending to the United States.
They are essentially controlling how it's being sold, where it's being sold to. The key question, of course, is this line that we heard just this week about they want Venezuela to sever ties with the likes of China, which has been a key Venezuelan oil importer, and also, when it comes
creditor.
to creditor, right? But is this a new front, as we say, that Trump is, when it comes
creditor.
to creditor, right? But is this a new front, as we say, that Trump is having with China in the Americas now? This whole Don Roe doctrine, as he calls it, is it in some way changing the whole spheres of influence in some way? I think it's quite interesting that this is where we're seeing it all now play out in the Western Hemisphere.
Yeah, and the bill that the cost that China might face to perhaps not engage, right? So we talk about how it's the biggest creditor to Venezuela, might not be as big as most people think, right? So, there's a fantastic piece right now in the terminal that talks about how when the flow actually peaked, right? It was, I think, the year before Maduro took office. And since then, of course, while we are still seeing, of course, positive inflows on many fronts, they weren't quite at the same magnitude that they were going into that peak year.
Yeah,
right?
You see it when it comes to investments into the country from China. That has also dwindled in the last 10 years or so, or since 2020. Really, things have started to really collapse. They're still, as you say, the largest buyer of Venezuelan crude. But when you look at bilateral trade, though, that basically has peaked the year before Maduro took power. So it seems like even the loan situation and how much they're willing to really loan to Venezuela, that's also tapering off since 2012. So the headlines and what you see, obviously Maduro called it a perfect union with China. Underneath the hood, perhaps things are looking a little bit more frail than we think economically.
Yeah, not as closely tied. What we've yet to see, though, is certainly the financial obligations that, I think a few days ago
they still owe,
right? We talked about how China was asking its banks to have a look at the books and maybe see how much they're exposed as far as that's concerned. It's an ongoing story, fantastic piece. We can recommend that David Fickling's column, plus, of course, the story we just showed you there on your screens. We will leave you with a look at markets, FX markets, and that specifically dollar slightly bid. As you'll see very shortly. There we go on your screens. We'll continue the conversation on FX shortly. This is the China Show.
All right, checking some movers here today. We're watching computing stocks out of China. So you are seeing quite a rally here when it likes to Capricorn Tech, Hubei, Chaozhou Aviation Tech, and the like. So there's this sort of plan from the government to boost supply. So that certainly is helping some of these names like MetaX today up 6.5%.
We're also looking at battery-related stocks. About a few minutes ago, this headline dropped that China was holding a meeting on the battery industry. Since that point in time, a couple of more headlines have become public here. So, a couple of things, right? So, it looks to be, number one, this is an exercise to optimize battery production capacity management. They'll also be looking at enhanced inspection of battery prices, strengthening regulation, enhanced market supervision in that meeting with the battery companies. Not a lot of market reaction, I can tell you, at this point in time. So it's everything from, of course, the battery makers and, of course, the raw mat that goes into that. Things like lithium, as a good example. Okay, we will take a short break and see you on the other side of it.
$11:29 a.m. in Tokyo. Japanese markets are heading to that lunch break. And right now we are seeing red arrows across the board when it comes to equities. So the Nikkei is down 0.6%. A lot of the big moves have been some of the big names like SoftBank and the like. You add the China-Japan tensions that seems to have escalated now once again, and that's still weighing on this equity market. Yen's a little bit weak around the 156, 157 sort of level there. And JGBs are slightly bid up here. We're down 2 basis points for your 10-year yield.
Yeah, that's been a fairly consistent move over the last few, let's call it 12 hours or so, all the way back to the close of Asia yesterday. So yields down, stocks down. Dollar is somewhat catching a moderate, mild is perhaps the more apt description here. Coming up on your screens, Bloomberg Dollar Index, as you can see, 1208. Sector breakdown in the equity markets is, let's call it flat to the downside because of some of the heavily weighted stocks. But in terms of market breadth, this one looks actually more even, more stocks down though, just in absolute terms, in absolute numbers. But yeah, we're still trying to figure out. So the AI conversations really made itself felt quite strongly in the first few days of this year. Commodities is part of that, as Taosha Wang was pointing out. The Fed and macro and monetary policy, not so much just yet.
Yeah, we're still waiting for a new Fed chair announcement, of course, and whether, the FOMC can continue cutting, that's still going to be a key question as well. We did speak with the former Federal Reserve Vice Chair Lael Brainard this morning, and she thinks the central bank's independence is key to keeping global investors confident in the dollar. We spoke with her earlier, and her thoughts on the Fed's decision last month to cut rates.
Well, I certainly think that the Federal Reserve made the right call starting in August to focus on the labor market. We saw 5 months in a row the unemployment rate ticking up. The job market had slowed, and also the tariff impact was somewhat more moderate than many had feared. And those things together made sense to do some insurance cuts. They did 3 cuts in a row. But as you know from the minutes and from a lot of the remarks that some of the Reserve Bank presidents in particular have given since then, it was a finely balanced decision. And so I think a large number of the committee are going to want, unless the data really deteriorates dramatically, are going to want to be on hold for at least a meeting, maybe 2 meetings, while they observe how the economy is progressing.
And between inflation in the labor market, and since we're looking at data now, which of the two do you think currently holds more weight as far as decision making is concerned?
I think the labor market is the focal point for the majority on the FOMC. Again, the unemployment rate has ticked up. It's now at 4.6%. We'll know more tomorrow when we get that December payrolls number with the unemployment rate, and that is going to be very carefully scrutinized. The last set of data was not very good because of the shutdown. Also, we've had a lot of government workers coming off of government payrolls during this time. So tomorrow's print on unemployment is going to be very carefully scrutinized. I think if you saw a jump up in the unemployment rate, it would put a cut back in play. But so far, we've seen data from ADP and also from job openings, layoffs, that suggest that the labor market continues softening, but is holding.
Can I just ask you a direct question, though? As it pertains to political pressure on the Fed, in your view, do you think the Fed has lost perhaps 2 things separately, a degree of autonomy, and perhaps because of that, a degree of objectivity as it pertains to decision making?
Well, I think that is certainly what is at risk here. And I just can't begin to emphasize how important that is. The Federal Reserve's independence is really at the crux of its ability to keep inflation down. It's also at the crux of why global investors are so confident normally holding dollars, because the Fed has a track record of institutional independence, certainly since the 80s, of keeping U.S. inflation low and stable. And that, in turn, means that Treasury securities hold their value, dollars hold their value. So a lot is on the line here. And yes, the president has taken unprecedented measures to put pressure on the Fed, including, for the first time ever, firing or attempting to fire a governor without going through an investigative process. And that's why this Supreme Court case, we'll see hearings on that January 21st, is so crucial. If the Supreme Court doesn't uphold that the Federal Reserve is different from other independent agencies and that you cannot fire governors at will, that would be a major blow to inflation fighting credibility in the United States.
That was the former Fed's vice chair and former White House National Economic Council Director, Lael Brainard there. Now, Stephen Myron, Fed governor, will be joining Bloomberg Surveillance later, of course, today, of course, and we know, of course, the call he's making as far as the not just lower rates, but much lower rates, of course, and they'll be also discussing, of course, Jay Powell. His term ends in a couple of months, so that's coming up on the Times, on your screens. Stay tuned for that Fed conversation.
Yeah, what does it mean for the dollar, right?
Yeah.
With the new Fed chair, when you talk about the division among the Fed FOMC members there as well, how dovish can this FOMC be in 2026? HSBC says the U.S. dollar is expected to stay soft this year, but the way markets are pricing in their expectations of Fed cuts may actually help stabilize the U.S. currency. And against that backdrop, the bank remains constructive when it comes to LatAm, while acknowledging noise from geopolitics among its other calls. Let's bring in HSBC's global head of FX research, Paul Mackel, joining us on set. And welcome back to Hong Kong. I know you just moved back, relocated, so
it's great
to have you back here.
It's nice to be back
in the region. Your outlook for the dollar, sir, it seems to be interchanging here, depending on what we see with the Fed, too. What's the call for this year?
Absolutely. Well, I mean, you spelled it out very well, what we're thinking, but it's a view that we've had for a good number of months, that this dollar softness is going to be ongoing. And what's driving that is ultimately the Fed still has an easing bias. And there's no fear of the Fed in financial markets that they're going to be rushing to change tack and shift to a hawkish type of stance anytime soon. So when we have that backdrop, that spells relief for many other currencies, primarily in the emerging world. And also we have to think about those stories where central banks are on the cusp to raising interest rates this year. Yeah. And that's very much driving our preferences in 2026.
Yeah, when you look at consensus, and I think we were chatting during the break, right? Consensus on the Fed will cut rates. That the person that will replace Jay Powell will likely be a dove. Among those and many other assumptions, which do you think the market should be paying attention to that might not be the case this year? What's the risk?
Well, the risk is, it's not our view, but the risk to the view would be, what if the Fed chair is not as dovish as what financial markets are currently thinking? Because at the end of the day, the economy is still seemingly holding up quite well. Inflation could be on the stickier side. The one big beautiful bill is kicking in. What if this new chair turns out to be more orthodox? And as I said, not as dovish. That would be a big surprise in the currency market.
So what do you think is going to be driving FX more? I mean, is it still going to be rate differentials? Is it still, you've talked about equities also really kind of driving a lot of the moves that we're seeing in currencies now, too.
Look, it's a great question. And if you go back to what happened through a good part of last year, the relationship between exchange rates and rate differentials was weak. It broke down. But what was driving that decorrelation of sorts, because policy uncertainty was so high. But if it turns out that policy uncertainty is still on the lower side, it gives room for the traditional drivers to matter more, and that's the rate differential argument. So I'm banking on that still holding up, being the dominant force for at least major currencies. Not every one of them works in that environment, like the yen is clearly not. We'll leave that one aside for the second.
That's a different set of...
but just to get back to the point, I do think it's going to be very much about the Fed, at least for the next few months.
And the equity market performance component as it pertains to driving performance in FX markets, do you think that continues, and how does it manifest the most? Where does it manifest the most this year, if it does?
So absolutely. We have to think about our framework, and it relies on very basic needs to identify which currencies we like. And if you have a benign dollar, this soft dollar backdrop that's feeding into relatively loose financial conditions, whether globally but also in the U.S., so in your context of risk appetite being buoyant and the equity markets holding up, again, that tells me that we should be looking towards the riskier complex in the currency market, and that's been in the emerging world. Not everything ticks the right boxes, but also, as I said, at the opposite end of the spectrum, those places where central banks perhaps need to start raising interest rates, like in Australia or New Zealand. This is the framework that we're approaching with.
And what has surprised a lot of us is this rally in the renminbi. And to what extent do that could be an anchor for the emerging world and really kind of drive this EM?
So if it's strengthening gradually, we have to look at that as a net positive. Okay, there's no question. But I think we haven't disagreed with the direction of travel. So this outperformance makes sense to us. And if you overlay what I've just been saying about the soft dollar, then you have to assume that this gradual appreciation can continue. I think the real then you have to assume that this gradual appreciation can continue. I think the real test could be after the Lunar New Year holiday. So if this appreciation continues thereafter, then it could begin to change expectations that are we looking at something even more meaningful, more powerful for the currency in terms of strength.
Is that, do you think the market's looking ahead? And I mean, rates markets, we look at the yield, right? I know it's absolute basis, 10-year yield in China at 1.9 is low, but we've been slowly testing that upside. Swaps markets are showing the 5-year and 1-year that inflation might be coming back. Do you think the market's somewhat pricing a recovery in China this year? And do you think that means a stronger currency makes sense?
I think the way to approach it is to assume that there's going to be stability. I mean, if there's going to be some softness, some of the activity indicators have been on the soft side lately, that there could be more stimulus. And so there's a floor in that sense.
Okay.
But overall, I think we have to step back, and what's influencing the renminbi having this degree of resilience is what I've been emphasizing on the dollar. In a soft dollar world, then this currency too should also be holding up, even if the yields are relatively low.
I'm going to ask you a longer term question, just given this whole de-dollarization theme that played out last year. The situation in Venezuela really shows the U.S. is really kind of changing the whole world order in this whole spheres of influence. Given getting access to Venezuelan oil assets and kind of controlling where things go, you have some analysts saying this is going to really be a setback for the internationalization of the renminbi, for example, just given it might impact how much oil they can get from Venezuela, for example, and the resources that they get. How do you see geopolitics playing into the whole de-dollarization thing? Do you think it actually speeds it up, or the opposite?
Look, I mean, right now, uncertainties are elevated because it's a different narrative compared to what we were obsessed with in 2025, which was trade policy and trade policy uncertainty. But I think the evidence around de-dollarization wasn't very strong last year. I mean, even at the peak, I wouldn't say euphoria, but peak scare of it in the second quarter, it turned out to be a nothing burger.
True.
So I'm a little bit skeptical of it. What will ultimately matter for the dollar's longer-term view is the willingness for investors to put money into its capital markets and probably the yield and what the Fed does over time.
That's a good reminder. I almost forgot about that. There was a point last year when people were talking about, are treasuries still safe to buy and own? Remember that? Yeah. Thank you for reminding about it. So, but just to continue the conversation, can our producers bring up that graphic that showed some of the top calls from HSBC? You're largely constructive on LATAM. What's noise, and why are you guys so constructive?
Well, the noise will be more elevated in the region this year because the political dynamics the political calendar is quite busy. But on the other hand, you're quite compensated by yields, whether nominal or real, being quite high. I mean, this is not a new story, and I think this is where investors have been gravitating towards. You don't have that same kind of carry trade dynamic amongst Asian currencies. It's much more nuanced in terms of what to like here. But renminbi is the one that is screening well on a lot of people's radars these days.
You mentioned about the carry trade. I got to ask you about the yen as we kind of sidelined it, but we got to bring it up. Is there anything that can really strengthen it from here moving forward?
We've been waiting for it.
Yeah, we're waiting for that train to arrive, and it seemingly never does. So you're not alone. But look, I think a couple of things. One is there has been some domestic political uncertainty that I think has undermined people's view about what could be happening on fiscal, also monetary policy. This is a story that's been digested. But for right, still coming back to the dollar side of the equation, and if it's softer, it could help stabilize the exchange rate, dollar yen that is. But we need the local community to start to think differently. Could they begin to repatriate more or something along those lines? That would be a very important catalyst. That indeed would be quite significant. But again, we're still waiting for that train to come.
Yeah. Has that mindset somewhat changed ever so slightly? It was more than a couple of decades of, a stagnant mindset around there was no interest rate, there's no inflation. And I wonder, with the recent pickup in the delta we've seen there, do you think that's influenced some?
Not yet. Not yet. I mean, because at the end of the day, if you look at adjusted yields for inflation, real yields, they're still quite unattractive. And I think that's fueling this idea that, the money outflow can persist for now. But again, let's not lose sight of what really can influence this exchange rate. It's probably more dependent on what the Fed could do. If they're easing, who's the Fed chair, all these other issues that weighs on the broad dollar, keeps it soft, then again, that can give some respite to the Japanese yen.
Fantastic. Happy New Year. It's very nice to see you. Let's do this again soon, of course, when you have time. Let us know. Paul Mackel, of course, guys, Global Head of FX Research at HSBC. Just ahead in the next hour, we'll really zoom in on, just speaking of FX, continue the conversation, perhaps with a sharper focus on EMFX. Cities joining us. There you go on your screens at those times. So coming up very shortly here on Bloomberg Television, we'll have more ahead here on The China Show. This is Bloomberg. Right, looking at shares of Z.Ai, trading debut today started on the softer sides, but as you can see, we've since picked up some momentum but lost a little bit of it in the last few minutes or so. We spoke with the co-founder and chairman, in fact, here, talked about things like U.S. developers may succumb to the same price competition that we've seen, of course, with their Chinese cohorts, and that's really led them to forego profitability. We spoke exclusively, of course, to them, and they also explained the reasoning behind, well, taking the company public.
We've had some plans for going public since quite early on. Our R&D investments in foundation models and the following commercialization strategy were essentially preparations for an IPO. We started some initial work since last year. Now we achieved the IPO this year. That's more about following the natural progression of steps.
How do you plan to spend the money that you've raised through the IPO process? Where do you see it going mostly?
The fundraising amount for the IPO is planned based on the company's development strategy. There's two major segments: R&D for foundation models, and the following commercialization strategy. 70% of the IPO funds will be allocated to R&D for foundation models, which includes the development of a universal foundation model, the currently highly anticipated intelligence agents, and multimodal systems. About 10% of the funds will be allocated to commercial infrastructure, supporting the foundation model. This includes developing inference tools and models as a service. Additionally, a portion of the funds will be allocated to ecosystem partnerships, and some funds will cover operational expenses or general corporate purposes.
As a company, Z.Ai was initially more focused on government and SOEs, for instance. How do you see that changing, and are you looking to build out more partnerships in the private sector instead?
The demand from large B2B clients is substantial, which accounts for a relatively high proportion of our current revenue. But we're also seeing that our cloud-based revenue, specifically from our MaaS platform, is growing rapidly, where we saw user numbers grow tenfold. However, due to its lower pricing, its contribution to total sales revenue remains relatively small. We believe that in the future, sales of standardized products, particularly those based on MaaS platforms, should generate larger revenue and grow at a faster pace. We anticipate that growth will exceed 50% over the next 3 years, with more than half of that likely coming from cloud-based clients.
It's been said, for instance, that something that Anthropic might charge $200 for, Z.Ai, for instance, would be looking at 200 yuan. So it's obviously priced a lot less than what you see in the US. But how does that impact your margins, and also how does that impact your path to profitability as a business?
We believe that based on the overall trend, the price for MaaS will continue to fall gradually, because we think it should be an infrastructure for the entire society. At the same time, for AI, for example, the compute costs should also be gradually decreasing. We see this trend very clearly. For instance, in our current coding plan, the price of compute power for our coding API is about 1/10 of clouds, while our performance can reach 90%. This makes us more competitive and benefits more users.
Do you think then that US companies like OpenAI or Anthropic, do you think that they actually need to look at the pricing strategy of companies in China?
I believe that once the market matures through full competition, more people will understand the capabilities, performance, and pricing of these models. Reaching a state of equilibrium, it is possible for US companies to lower prices, but ultimately, I think that depends on their own decisions.
I'm wondering also about the geopolitical angle, given that there's been a lot of discussion around H200 chips and the access of those in China. Would you be looking to acquire those? And which chips are you using as well from the domestic companies?
We maintain an open attitude regarding the use of chips, as we focus more on cost effectiveness. We hope that the chip performance will become even better, while the chip price will be lower, so as to reduce our overall costs.
And that was the Z.Ai chairman and co-founder Liu Debing speaking to Bell there. If you are a subscriber and want to rewatch that interview, you, of course, can watch it through our interactive TV function, TV Go. You can also become part of the conversation, send us instant messages, questions for our guests as well. Feel free to check it out. TV Go. This is Bloomberg. All right, if you want to track some of the big plays here in tech, it seems like big tech is losing out to what you're seeing in the star board here today. We're seeing 2% gains on that board here. So certainly it's the tech space, the hardware, the semis that are still doing quite well onshore today over what we're seeing in Hong Kong.
Yeah, there's really been a move down the market cap chain, right? So this is the star board. You look at the Chinex has also done very, very well of late. And I haven't checked it though today. And it's really picked up in terms of the turnover in mainland, right? So I think the CSI 300, specifically the IT index, is actually still up 1% despite the declines we're seeing on the broader gauge. And this just underscores the renewed vigor and activity. So we're about 80 minutes or so into the cash market session, and already we have crossed the 1.4 trillion yuan mark, and that puts us well on track. In fact, to top yesterday's 2.8 trillion. So we'll continue to track this as a gauge against market sentiment here.
Yep, and so that certainly is one thing to watch. The rest of the markets, we are still seeing a bit of whipsaw when it comes to the geopolitics side of things. You had Trump, obviously, with these posts about defense, about housing, that really did weigh on market sentiment overall here. We are still seeing a slightly stronger renminbi, though, but still around that 698 handle here. CSI 300 is lower by about 1/3 of 1%. That's it for us here on The China Show.